thing before we get into our strategy. I just want to show you this IPDA look back because it's one of the most important things.
Yes.
Where's this called? That's supposed to be called. And it works in all markets. So you can. I tried it even in crypto, and I have positions in crypto as well. But it's something that the algorithm has to do. It's set to do, right? Which swing high do you put out Fibonacci, for example? Now you in. Just give me a 2 second and we'll start. Just let me know, guys, is the voice being too loud right now? Is this background noise from the music, from the TV? I'm gonna clap for as usual. So now we open our chart. Let's delete everything. And it's as simple as 1, 2, 3, how to plot this IPDA look like. Okay? Let's delete this. Alright. So the market, according to ICT, the market moves in quarters. Okay, every quarter there's a season. The seasonality says that every quarter the market does something. So every 3 to 4 months, the market does something. Okay, most of us are familiar with it. For example, now approaching into May, everybody knows that May will become a bearish season. You sell in May and you buy again in September, right? The reason behind it is just not the market likes to behave like that. It's because these rich boys, rich girls, businessmen and businesswomen, they start to go on the holidays, right? They worked all year long, and now they want to go on holidays.
Stop
So
field.
they start selling their stuff to liquidate their money so they can use it and spend it elsewhere, right? So that just makes sense. That's something that's coincidentally happening right now, which is a good advantage for us because it confirms our bias as well, which is bearish. And so now let's go ahead and plan everything off. So what do you want to do here? Once you go on the daily, okay, draw the IPDA, look back, and cast forward. There's this indicator by $2, I think. Let me have a look. You can do it manually, but I know you guys don't like to do manually because I don't either. Anchored IPDA, it's a free indicator, okay, by $2. He does amazing stuff. What you want to do is, once you turn this off, once you turn this on, you'll see something like this, okay? But you have to anchor it to the correct place, okay? Now, before I go show this, ICT explained this in many different ways, but the way he actually stresses enough on, and the way I've tested for a really long time, and this is the first time I'm sharing with you guys, is you want to see the first time there's a structural change on the daily, okay? Structural change, whether bearish or bullish. Now, what I mean by that is there's a change for change of character or market structure shift. They're all synonyms of the same exact word. So how do we get a change of character? Well, by looking at the chart, you see a higher high, and this swing low in between got broken. So this is a change. You might be like, oh, I'm not familiar with how to find this. This is a high, this is a high, this is a swing. Well, go ahead and use Lux Algo. There's a free one, Lux Algo, and there's a premium one as well. Just go ahead. I can hear myself in it. Yeah, go ahead and just do it. 1 second. So I'm sorry about that. All right. Yeah. So you go ahead and find Lux Algo, and it should automatically plot them here. Okay. So here, what do you see? We see 3 different choices. You want to see the earliest one, the most obvious one. Okay. The most obvious choice in this whole time is this one right here. We have this higher high, liquidity above here has been swept, and this swing low breaking it is a structural change. Here is not an important level. Why? Because this high is not taken out. This is actually another topic, but I'm explaining it here as well because you can interpret it onto your 5 minute, 1 minute, 3 minute, 15 minute, whatever it is. To find if a choice, let's say you're trading and trades any trade that utilizes change of character or shift in market structure. They're the same synonyms. You have to get a high, so you have to get a swing, a low, a high, a low, a higher high, a lower low. So this low, anybody that has been shooting from here have been swept, and now we broke this level here. This is a really valid change of character, okay? This one here is not. This here didn't take out this high. or this high. You can, okay? It has to take out at least the highest high. In this chart right here, it did. That this here is the actual change in the capital of the market. This is an actual change in the market structure. So this is a shift in market structure. So we're bullish. At this point, we're bearish. You might be asking, look, what about this one? Well, here's a chart, which is because indicator based. I don't trust them. How do I trust it? If we have a high, higher high, lower low, if this low is breaking like that, if this high here, pick this high out, then we get this chart, then it's valid. You can see that we didn't pick out this high, so this chart is fake. Anybody that's been shorting here, even inside this FPV, if it exists, I can't see, I don't think it's FPV, well, the market could be going up. And they'll be like, oh, I don't trust this ICT stuff. That's not how the market works. That's not how a chart works, or FPG works. This is a true structural change. This is not. What about this one? We have a high, lower, low. The market, these are 3 days. The market continue going lower. But here, it's not really a strong level. It's not really a strong, like a swing low, you know. This market, the way it's marked, it's not really a swing low. This candle itself is the low and the high, right? We don't want something like that. We want a low, a high on the left, and a high on the right, higher high on the right. A low, a high on the left, and higher high on the right. Okay, if we're talking bearish. Anyway, this is the only one valid. Okay, this is an interesting thing I was not planning on teaching, but use this. It will change your trading by 900% alone, without even me continuing anything further. Now that we identified the real chosh, the latest chosh we have, which is this one here, you go ahead and take your anchored IPD array, and where is it? The anchoring point is right here, and you will take it onto that swing low. You follow it like that. Now you get the chart split into two. The left side is IPDA 20, 40, and 60 days. Going to the right, excuse me about that. Going to the right, we have plus forward. So look back, looking back, looking forward is plus forward. We have 20, 40, and 60 days respectively. Now I'm going to delete this for now and just show you how to draw it manually. So you draw a vertical line on your chart right there at the top candle, right? Or the swing low that is the market sector 6 is right here. Did we break it? Yes, we broke it here. So this became valid. Okay, I'm not looking at this chart. I'm looking right here. You can keep this on your chart because it's not gonna change right now. This is a long time, 24 to 60 days. We're approaching the changing day very soon though. I'll explain that later on as we go through. This right here is our anchoring point. Okay, now you will hold shift on your chart, hold shift on this line, and scroll back 20 bars. Now notice on here, I can't scroll to it because it keeps moving. It says 20 bars and 29 days. All right, we are not looking at the days. These days that number right there, 29D, it counts holidays. We are talking about business days. We're talking about trading days. 20 bars, the bars will show you actual bars, which means every bar only happens in a trading day. So 20 bars is equal to 20 days. It's not really 29 days as depicted in that small bar. You can see that's been moving around here. Okay, so you first want to go to 20 days, put a vertical line there. Then you want to go to 40 days, put a line there, and oops, my bad. And now you want to do the same thing for 60 days. Okay. Now, what's the important thing about this? The algorithm. So here's our anchoring point. The algorithm will seek liquidity or FVGs or order blocks or breaker blocks or rejection blocks or daily high, daily lows, swing high, swing low, or mitigation blocks. I don't know if I said rejection blocks, also rejection blocks, volume imbalances, liquidity voids, anything that are within these levels, within this time form, right? So as well as this is the 40 and this is the 60. Okay. As we go further, it's a level which is more important, but it might take a little bit of time to reach it. Okay. So right here at this 20 days, from here to here is 20 days. Okay. I'm going to use the anchoring point to show you. You want to go ahead and draw the lows and the highs between the 20 days. Let me just go ahead and label it. Now pay attention very carefully here. 20. days. Let's copy this over. 40 days and 60 days. Okay. This is extremely important thing to take into account into your trading. Okay. I will provide beautiful levels that we're gonna go over very soon. All right. So let me turn off the Lux Algo indicator. You can see this 20 days right here. The swing high and the swing low. You just wanna draw a line on it. Put a line on it, horizontal line, or you can give it color whatever you want. This is the lowest low and this is the highest high between this level. So these two levels right here are extremely important. Since we have a market structural shift that is bearish, the market would start to go hunt these levels, right? The earliest one we have is the 20 days period is this one, right? We're not looking at this low or this low. While we are here, I was still, every trade I took the past week, the past 2 weeks, I think, were just shorts, right? And I'm not looking at this low while people think, oh, we have order block here, order block right there, an order block right here, we have an FPG, it's going to respect. No, it's not. It's going to go through right through it. It's going to go to it. It's going to go to these levels. This low is more important than any of these levels. And we're talking in hindsight, but while we are here, I'm not looking at those. I'm not looking at these equal lows. I'm looking at this low, right? Because it's the swing, it's algorithmically, the algorithm is written by humans, okay? And these humans, they have to give instructions to the algorithm, to the coders, to the developers that are coding this algorithm. They can't just tell them, I just want to take this next swing low, swing high, or these equal low, equal highs. I want it to react there. No. It has to give it a set of instructions that can be replicated into a program that is called algorithm by itself to do it automatically, right? It cannot be fed. It's not machine learning. There's no machine learning in it. It's self-code that gets instructions changed every 20, 40, and 60 days. Okay. Now let's continue. So here we mark the high and the low for the 20 days. Now let's mark the high and the low of the what you call it? The 40 days. This is the swing high. Oops. This is the swing high. And this is the swing low. Okay. And this was Friday's trade. I was in that trade alone. I was in the sale. By the way, I miss you guys. I was taking that trade. I went in 5 micro. By the way, every trade I took here, every trade I took on these accounts was micros. Hold on, this is my thing. Every trade I took on these accounts are micros. 5 micros. These are not minis. These are not 10 minis. 10 minis. They're not 5 minis. They're not oversized. These are 5 micros trades. I hope you guys understand what I'm trying to say here. These are 5 micro trades. This account, also 5 micros trade. Nothing more, nothing less. This trade here was 5 micros. I can go ahead and show you in the statistic. I don't know how you do it, but we'll go ahead. We'll get into that in a bit. So you can see how powerful it is. If I'm in 5 micros, then everything here can be doubled to a mini. I know some people like to go on 10 minis, 15 minis. I'm in 5 micros, and I'm getting these results. So it's extremely stressless. Okay, now let's go back to our chart. Right, so we highlighted this day. I want to give them red. I don't like the blue. Hold on, let me just change this real quick. Bear with me because it's important. So before I go into what happened to target these, let's continue and draw just our highs and lows. What about the 60 days range? From here to here is 60 days. Where's the high? Sorry, my bad, guys. I have to remove this. I'm going to remove everything to 20 days, okay? So we did, in 20 days, the highest high is here, and the lowest low is here, okay? Now, for the 40 days, the lowest low is here, right? From here, from this line to the start, to the anchoring point, I'm going to give it a different color. From here to the start, this is 40 days, right? 40 days. Where's the lowest low? Right here. Where's the highest high? Right there. I put it here. It was my bad. So the 20 days and the 40 days they share the same high, but they differ in lows. This is the low of the 40 days. Now, similar thing, we go to the 60 days. Where's the lowest low in the 60 days? From here, from the start, origin, anchoring point to 60 days, to this line. Where's the lowest low? Right there. This is our low. So now you can think that where the market would like to draw, eventually it has to come back to this level. It doesn't care about these levels. It doesn't care about this of this fair value gap here. It's beyond the range the algorithm is allowed to look back to. It's not looking at these levels. It's not looking, oh, there's a volume imbalance. So why take this out? We're gonna go back to this gap right here. I bet some people in that short, people trying to short the top, they're trying to maybe say fill that gap right there. Okay? That's not how it works. It's a real liquidity void. And if you take the whole thing, it's a volume imbalance. Or this fair value gap. Or I don't know, this swing low here. This breaker, low, low, higher, high. This breaker here, we're gonna target that. No. Okay? It's allowed to go back to 60 days maximum. Now, so now we've drawn the lows and the highs. Okay? And the high of the 60 days is also the same high of the 20 and the 40 days. Right? So this level, you can tell already, this level is so strong. Once the price comes back to it, it's gonna start a big ass move. Excuse my language. If the market comes back to it, it's gonna do it again. But it's not gonna go there. It's not gonna allow it to be there. Okay? We're looking for downsides. Okay, we're only looking for downsides. So for the past few days, these are daily candles. So you can see what we did every single day. The market just keeps going down. And it will go to these targets real fast. Anytime the market goes up, we're gonna go on the lower time frame and check it. Anytime the market goes high, and I mentioned it today in chat, I'll call people, anytime we take a swing high, especially a session high or equal highs, the market is very likely to start reversing and going to these targets. Okay, it only requires such liquidity. It doesn't require to do much more. Okay, it does such liquidity. It only requires such movement. It's enough for me. Right, it did enough of what I wanted to do. Okay, so before we get into that, now we draw all these levels. That is enough. Okay, we can break these levels, these three levels, these four levels. So 1, 2, 3, 4. Well, but by the time the market goes to them, we're like, oh, it's gonna take days, weeks. Well, not really. Okay, why? Because we can take our Fibonacci from the swing low, the 60 days. Actually, let's do it for 20. Yeah, from the 60 days all the way to the actual high, right there, the highest high. And we can go ahead and put quadrants, split this into 0, 75, 5, 25, 0. Okay, I did the opposite, but don't worry about the numbers. I don't care about the numbers. This here shows us that these are pivots. Okay, these are algorithmic pivots. Okay, but most likely, if we put on the CC, which is constant quotient, which is equilibrium, anything higher than this is premium. Anything below this is discount, right? So if I'm checking where are we right now, we are in discount, right? From here to here, we're in very discount. We're no longer in premium, all right? So this shows you where the market is right now. Oh, this is on the 60-day scale. What about the 40-day scale? Well, this is the swing low, and this is the swing high. Well, we are also, again, hold on, I can do this there. And I've got a much better way to do this as well. I'm going to do all of them. Give me a minute. Yeah, we are in discount on the 60 days. What about the 40 days? From the swing low, the swing high, same swing high. I'm not looking at swing high. This swing high has nothing to do with me. This swing high has nothing to do with me. Okay? But again, it's not going to be looking at these. Again, if we extend this line out, we're also in discount on 40-day scale basis. Now let's move this to 20 days. Now we are also in discount on a shorter time frame, on the 20-day scale, right? So the everything showing is we are in very extreme discount. We're no longer in premium. So back then, once we see the structural change on the 5-minute, on the 5-minute, sorry, not the 5-minute, on the daily, we are aiming to go down, right? So anything that is in discount, for example, anything that is in discount are important to us, and they must not be touched before. For example, this FPG here has been partially filled. Here. This lost its momentum. It's no longer strong. This remaining part of it from this low that is uncovered, this part here is important. You can see the market went on Friday and filled like that. Okay, we have this FPG right there, and I'm going to go into the more details in a few minutes. Don't worry, guys. You want to be looking. I can remove these lines if you want. It really doesn't matter. And I'm going to show you how, if we go, our indicator, but it will draw these discount and stuff alone for you, okay? But we did it manually because I like to show manually, so you can be able to apply on your own, or if you want to use an indicator, you can use this one. We're going to go over it as well. So anyway, we were here, okay? Last week we were somewhere here. This is 1, 2, 3, 4, 5, 6, right? That's a full week. At the start of the week, I was already bearish targeting this low, this FTG, this order block, and this or this FTG. Okay, and low, higher, high. We have this bullish breaker block that's not been tested yet. It's not been tested yet. It's been tested when? Again, on Friday. Okay? So these levels right here are the ones you should be aiming to. While we're here, I don't care about all these low resistance liquidity levels. I don't care about this. I care about this low, and this low. So every time I take a trade, every single time I take a trade, I can hold the position all the way down. So if I'm positioned here, I'm going to take as much as the market allows me. And you can see we're closing near the close, near the close. So we're closing near the lows every single candle, and it's a very straight line. It's not wonky like this. Why is it not wonky like here? Because we already formed our structural change there, right there. We broke it. Now the market can continue going down. Anyway, these are our targets. So what do you think our target would be for the continuation of this week? Well, I'm looking. Let me move this line. I'm looking for this FTG right here. Why am I still looking at it? Because it didn't touch it. What did it touch, guys? It touched. Hold on, let me just check if you guys did. What did it touch? It touched this volume imbalance right there. Can you see that? Can you guys see it? And that was my target on Friday. That's exactly what I targeted. I had 5 markers from the top all the way down, and it was fast as hell. It was about 600 ticks, stuff like that. This volume imbalance right there. This volume imbalance is really important for us because it's within the PDA. Look back, it's not being touched. The algorithm right to it, and reflected right here, right there to the tick. It's compact. Okay. Now I think we'll accumulate some orders. We'll drop on the short time frames, and we'll check what's going on, and we'll probably come back and now fill this volume imbalance, or come back and tap into this daily fair value gap, and essentially into this low, higher high, this breaker block right there, okay, which also it touched it already, but that it touched already. So we have nothing to do with that. Just this FPG and this order block and this FPG. It's the only thing I'm looking for out of this whole thing, this whole move, right? Now, how long can this continue going? How long can this continue and keep happening? Like when will the market start to reverse? Well, same thing how we did our origin, which is the unkilling point. We're back 24/60. Likewise, we look 24/60 into the future. Yeah, we look into the future, guys. You guys holding it up. So we do the same thing, same unkilling point. You go ahead and draw 20 bars, which is 20 days. Just like that. Put control V will drop the control V, I think. Okay, sorry, option view on the map, and then 40 days, and then 60 days. So the market would most likely, now this is the 20 days, right? I'm going to remove these lines. I'm going to put this on so it can show you the same thing in a much better way. I'm going to remove this very soon. But the market, it came to 20 days. This is the 20 days, right? At the 20 days, it's supposed to, few days later or few days before, or just exactly the date, it has to start reversing. If it took one of its IPDA objectives, it might start to reverse, find another opportunity to find short, and then continue going down, taking out the rest of the 60 days. Any PD areas that is left behind, right? It can reverse at the 20 days, it can reverse at the 40 days, and it can reverse at 60 days. So we came to the 60 days, and at the 60 days, we have no reason, at the 20 days, we have no reason to reverse. Why? Because we still didn't take all these targets. So at the 20 days, it didn't reverse. It continued all the way down to its levels, all right? Now, when do I expect the market to start to reverse, to become maybe bullish? If maybe it comes back to 13 May. Okay, this level here is very important for us. For crypto, it's much shorter time frame. You can go ahead and check it. For crypto, it's approaching much faster. So maybe at that date, it can give you the opportunity to see what the market does. All right, so here you can see tomorrow. Yes, exactly tomorrow, the market is likely to start reversing. Okay, it took its levels. I'm sorry, I have so many stuff here, but don't worry about it. It's the same lines. And you're going to see why I have much more lines here. I'm going to do it on there as well. But tomorrow, you're going to see the market starting to probably reverse all the way back into an opportunity to go short, to take any levels that haven't been taken out. So these FPGs have not been taken out yet. So the market can go maybe into this FPG, and it has to do it by this exact date, 23 April. All right. Right here, it should come back maybe to this FPG. It can go maybe ahead by 1 day or 2 days, but eventually we have a high, high, lower, low. This is breaker block. This is the FPG. If you take this dealing range, this is above. This is the discount. This is the optimal trading entry. This is the FPG. This is the discount. You have an order block. This, the algorithm will run to this. You'll find a beautiful opportunity to short here and then come back and take out anything remaining from the 60 days period, which looks like something like this. So I'm doing it wrong. I'm not doing it wrong. I'll use that manually. Anyway, so this is supposed to be like this. All right. Anyway, so you can pay attention to Bitcoin, even if you don't trade crypto tomorrow. Just have a look what happens tomorrow. Okay. Now let's come back to our NQ. All right. So this is our NQ. No, this is our NQ. This is our NQ. All right. So now we didn't do anything here. Now we're going to wait for the 60 days, for the 40-day level, which is in about maybe 10 days, no, 20 days. Okay. So the market can continue trying to target this. It might come back here, use this bullish. If bullish order block, this one will hold. This bullish order block didn't hold. This bullish order block didn't hold. This bullish FPG didn't hold. This volume of dollars didn't hold because they've been filled. We have to find fresh ones. This is the fresh one that's probably tested. Can I come back to it? This FPG right here and this volume banks have been shown us the first reaction for almost 2 weeks. The first reaction for the point level. All right. And it's going to continue going on. So our bias is bearish. So, okay? And our targets are this low, maybe this low as well, this order block, this bullish FVG, and this volume imbalance. These are our targets. Yes, you're targeting places where you normally enter, like an order block is where you normally enter, FVG is where you normally enter. These are levels where the algorithm will run to really fast like this. And this is not small moves, guys. This is 5,000 moves, 5,000 tick moves. Now let's continue and plot ourselves more levels because more levels means more opportunities to trade. Let's move. Now, okay, so now what do you want to do? You will take your Fibonacci and draw it from the low of the 60 days to the high. Go ahead and pick quadrants. If you want to check the settings, it's literally this 0, 5, 0, 1, 0.5, 0.75, 0.25. You can screenshot this. Increments of 25 cents. You will get lines like this. I like to make them red. All right. Now, I like to make them red. Now, we did it for the 60 days. Now, let's do the same thing for the 40 days. Where's the low of the 40 day? Low of the 40 day is right there. We'll take this low, same high, same low. Now, it's all the same thing for the 20 days. Where's the 20 days? Right here. I know it's getting messy, but when you go on the low time frame, it's going to be much cleaner. Okay. So now we drop to the 5-minute. Double click, and you will see that the market will now look much cleaner. So now the market is going up. Where would you be looking to target? Maybe you have this level right there. This level right there. You can, if you want to take a long, this can be your opportunity to get out the long and find opportunity short. I would be looking for short here, maybe back down into the levels I've been looking for. Okay, if I would go on a 15-minute and show you how from different stance. I think we have someone here. This is two Jones levels. I go here. Okay. Oh, let's go back to everything. If it loads. All right, now before we get into our sweep strategy is how we incorporate this into our sweep strategy. Now we determine the bias, right? And for many days, not for just for today. I'm not changing bias every 1 hour or 1 day. I'm keeping the same bias. And you've been pinging me very nicely. I don't know why it's being so slow and stubborn. But give it a second, guys. Oh, my bad, I didn't put anything else. But what was the longest? It's still loading. Give it a second. Wait, meanwhile, I'll plug my charger into my laptop. This is extremely important thing. That is, I showed you guys the result. And I'm going to keep keeping you posted, guys, with the same accounts, same numbers, just using this, using our sweep strategy based on these levels. But it doesn't, oh, there we go. Finally. So I'm in the 1 hour time frame, okay? You can see the market comes back to these levels. It runs into between two levels, goes to this level exactly, comes back to the bodies. Look at the bodies. Pay attention to the bodies. If here, this is the high of the week, but that's the last high we ever made. Market goes down, takes out this level, goes back down. It reacts at this level, goes down to this level, fills here, uses as resistance, goes down, comes back up, uses that resistance, continue going down, taking any fresh target we haven't taken. So while we're here, it looks something like this. At this level, this level, this level. I was targeting every single day. I was targeting one level. Everybody here is looking for accumulation, gonna pump up. I'm in the short. My stop was right there. I'm gonna show you how we enter the trades. And the market goes down, continue going down to this level. Next day, took out this level, this level, this level. From level to level is it's almost 1K. Okay, I'm not talking about 100 ticks, 50 ticks, blah blah blah, 10 points, 50 points. I'm talking about 400 points or 2K moves. And eventually, I wanted to hold till here, but I couldn't because the market closed overnight. So every time the market closes, next day the market takes out a London high, Asia high. I will take a trade in there and I will hold the rest of the day. I don't care what happens in between. And it goes really fast, really, really fast. Okay, so that's just showing on the 1 hour how it is. Right now, we came to this level, support here. Now we're aiming for this level that I've mentioned. It's a level that where the market will react to. Okay? It's important. It's digged into the IPDA. The IPDA, it sees this level. Okay, it sees it. And then probably find some support, maybe take me at AM out and then continue going down. But I don't know why it's being stubborn and being very slow. There you go. All right, so now that I gave you guys what you should have in your chart, I can maybe even send you a copy of this sharing. I can share this and send it to you guys, the link, so you don't have to do it as well. But I want you guys to try it by yourself on every asset you want. And the other thing I wanted to say is, yeah, now that we have our levels and where the algorithm would like to go to, this level here is the volume imbalance. This here is the FUG. And this is a swing low from the 60-day, I believe. Right? So how do I take my trades? Well, the sweep strategy, guys, it's the most consistent strategy. I'm not saying it because we made it, but it's literally never fails. Never fails. Okay? Not never fails. It fails, of course, but it's very consistent. It's very calmingly easy to do, especially the fact now that we have micros came into Top Step X. So now we can trade with micros, right? We can trade using micros, which makes the strategy even much, much, much more better because we can handle the risk. All right. Now we took Nuke AM. So obviously, we're going to be looking for a Chosh, a bearish Chosh, FEG, and we're going to be entering at that and targeting past this level and this level. Today, the trade that we took, the trade I mentioned in the chat was, before I go into the sweep strategy, it was New York AM took London. I entered right there. And I took one position short, took some at 150 ticks, and then I took another at 200 ticks. And eventually my target was 100, 120, which was this level here. But we took that level out. It was pretty smooth. You see how the fast it went. It was super fast. It was beautiful. Okay, now let's go into our strategy. We have a potential setup gain really soon here. If it comes back to this level, we probably expect that setup to happen much faster. But we'll see. Anyway, so our sweep strategy means what? What is it? Well, we have 4 sessions. Asia, London, New York AM, New York PM. Anything below a session low is sell side liquidity. Is liquidity. Anything above session highs, any of these session highs, there's liquidity. There's stop losses. So let me phrase it back. Anything below a session low is people's stop losses that have been longing. They're long, they put a textbook, based on a textbook, things they've learned from the retails, they put a stop loss on the swing lows, and they will hold. Okay. So there's a lot of people longing, they will have their stop loss here. If they're longing, that means you're +1 into the market. What does that mean? If you're +1 into the market, if you're long, you're +1. Let's say you long one contract. That means you're one contract long into the market. So to get out of the market, you have to flatten your position. So you have to come back to zero. A net total of 0 to be flat or without any position. So how do you do that? Well, you either take profit. Let's say you take profit. If you take profit in limit order, well, That's a sell limit order. So you get out at, I don't know, that much profit. Or if the market goes against you and hits your stop loss, that's also a sell order, right? To get you back to zero. If you're plus one, you have to get the only way to get out of the market is to sell your position. You sell it either at profit or at the loss. So here there's an accumulation of sell limit orders. When the market comes back down, it's you're selling your position as a stop loss, as a loss to who? To willing buyers who are the algorithm. They will buy from you to get to go to your essentially your target and much beyond, right? Similar thing here. You're short. Anybody that's been short, they will have the stop loss at the highs. If you're short, your position is -1. That's why it's called futures, because your position can be -1. To get out of the position, you have to sell. You have to buy back your position. So it's a +1 position. So your stop loss is a buy order, or your TP is a buy order. So if to get out of the position, you have to buy back your order. Well, if you buy, who's selling you? The algorithm is selling you. Goes down. Algorithm is selling you. Goes down. Again, New York AM, London, people shorting, we stopped them. You got stopped out, that means you bought back your position. If you bought it, who sold you? The algorithm, now they're in shorts. Okay? That's basically how the framework of our strategy works. Okay? And it's been consistent day in, day out, whatever the market condition. If you're ranging, bullish, bearish, trending, sideways, consolidating, it does not matter. Okay? Now, what was I going to say? Okay, so what happened here? I personally, now coming back to our sweep strategy, how do we do it? Well, for those who don't know, and for those who do know, this is a good replay of what you're supposed to do. Let's say you're in London. What do? Well, you wait for a sweep of the previous session high or previous session low. If we're in London, our previous session low and high are Asia. If we're in Asia, our previous session high and low are New York AM and PM. Sorry, New York PM, high and low. If we're in London, it's Asia. If we're in New York AM, it's London. If we're in New York PM, it's New York AM. Okay? High and low. So in London, we start previous session high, which is Asia's high. So we took anybody that's been shorting, we took the liquidity. Now we should be looking for shorts. That was step one. Okay? Step one, sweep of session high or low. Okay? Step two. Step two, Chosh. It will automatically draw it for you. Chosh. We got the Chosh right there. Not here, not here. Here we set the previous session high, right there on this candle. We're going above it. Going above a session, even with a wick, is enough to tell me it's a wick. Sorry, it's a sweep. We step here, Chosh. Nice. That was our step two. Chosh. Step three, FPG for entry. And in a little bit, you will see the magic that I wanted to put to you as well. Let me just look for oh, there it is. Right, step three, FPG. Okay, so here we have sweep. Step one, step two, Chosh, bearish one, very nice. Step three, FPG. Do you have an FPG? Nice. We have an FPG. We will enter inside this FPG, right? You put your stop loss at a swing high. It has to be at the swing, right? We'll speak about this a little bit more. The absolute swing is session high. It's not swing high, it's session high. If I was back here, this is the session high. But since it went no further, it became this, it moved the line up. If I do this is how our sweep strategy, original sweep strategy, you will enter your trade like this. This is how it looks like. At the high of the blue line. Give me a second for that to load. There we go. Session high was the blue line. You put the stop loss at the session high, and you would target previous session there, right? This is basically how our original strategy is. Okay, I've modified this again. Now for longs, let's have a long. Let's have a look. For longs. Before I go into the changes, structural changes. Okay, so suppose you missed out this trade here. Well, again, we swept. We didn't take our Asian session low, so we're still bearish. We didn't take a session low. I mean, we're still in session high. If you missed out this trade, you can take a trade here. Check again. Stop at the high, FPG, you enter right there, and you get out at the previous session low. Neither time did it go to previous session low, but that is our maximum target, guys. Some of you keep forgetting that it's the maximum target. It's not your only target, right? This is your maximum target. You can take partials or close whenever you want. Maybe at these swing lows, maybe at this swing low, maybe at this swing low. I don't know. But you can hold a runner maximum till previous session. Okay? That is your maximum. Same thing here. You entered here. Your maximum position size, TP, is here. But it's, let me just underline the same keyword again. It's your maximum, not your only TP. Okay? Don't worry, you don't have to wait for it to hold all the way there. Okay? Either way, you would have made beautiful money. Okay? Why? Because from here to here is 156 ticks. From here, yeah, from here to, I don't know, here is 100 ticks. To here, 160 ticks, etc. Okay, that's a lot of money. With one contract, that's 600 bucks, 700 bucks. With 10 contracts, that's, I don't know, you guys do the math. It's a lot of money. It's big and it's fast. You enter and moves. You enter and moves. Okay? That sounds a little bit weird. No, I want to see an opportunity to show you guys longs. So here, previous session low. This last trade I took, by the way, was a long. On the other today's trade on the second one, I think. I'm gonna have to find this trade here. This last trade, this 500 bucks, was on what? It was a long. Let's have a look. Now we turn off our previous our bearish ones. Now I'm giving us the opportunity to see the long version. So let's say we nuke AM. What did we do? We swept previous session low. Nice. Step 1, step 2, Chosh. Green Chosh, beautiful, nice. Step 3, FVG. Yes, we have FVG here. You enter this FVG and you target previous session high. In this case, it took our target, right? It took our maximum target. From here, zero drawdown to here, 324 ticks. With with one contract, that's 1,600 or something, okay? With micro, even with micro, that's about 800 bucks with 5 micros. It's nothing. I doubt anybody uses micros except Legend. That's because he's a legend. Yeah, so that's a beautiful trade. Okay. Now, that's the trade I took. But what's new, guys? What's new about this, Luke? Well, I'm going to go in a minute, but I'm just showing for those who are newcomers or just to question your minds. This is really important, and this will stick with you for the rest of your life. Because before we call this the sweep strategy, its actual name is one step for life. Right? One step for life. You take this step once for life, not once for life. So you never change a step. It's for life. Okay. Now, back to shorts. So here we took a short. We made our money. We didn't hit our maximum target. No problem. Again, we made 100 ticks here, 160 ticks here. We didn't hit our maximum target. No problem. But we're up 100 ticks, 160 ticks. Maybe you just aim for 100 ticks and closing your trade. So you're up 260 ticks, 260 ticks, 260 ticks right? Or for me, personally, I don't trade the Asia. I don't not trade the Asia. I don't take any setup. Even though there's beautiful setups, I don't care about it. London, I rarely trade in London, even though it gives beautiful setups. Sometimes we're going to go over more examples in a bit. Don't worry, guys. It gives beautiful examples, but anything below 3 a.m., I'm not awake. For this setup, I usually presume that this setup will probably not work. Sometimes I just give myself like that. It does work. It's as accurate as the rest, but I don't use it. I'm sleep. I wake up around 11, 12. So my time, so it's about 5 a.m. So this is my opportunity maybe to trade somewhere. But I rarely trade it. But for those who want to trade it, you can, because your stop loss is literally nothing. Okay? 144 ticks. Given the how you're going to go for 400 ticks. Anyway, yeah. So I usually trade only the nuke AM. Just the nuke AM. Sorry, nuke AM or nuke PM. Okay? I can take a short, I can take a long. Done. Nuke AM close, nuke PM. I can take a short, I can take a long. Cool. That's enough for me. One trade is enough for me. And you can see how much the market moves. The market moves 500 ticks. If you hold this whole trade, you would have paid 500 ticks with zero drawdown. This trade here, zero drawdown. This trade here, zero drawdown. Okay? Now let's go over what's new, guys. This trade here I took as well. On the other 3 accounts, on the XFA, I took this trade. On the other combined, I took this long here. Okay? What's new, guys? This is where it gets fun and interesting. What I want you guys to do is, we have a sweep, Josh. I want you to enter the Josh. As soon as the Josh closes, I want you to enter them. And your stop loss, no matter what, it has to be at the session high. Not swing high, not swing low, session high or low. Okay, like I showed you earlier, this is right here. This here was the session high. You want it at the session high. It can't be anywhere else. It has to be at the session high. Even one thing about session high is enough. The market can allow us to come back to the session high and then drop again. Okay, as it did here. Anyway, don't trade this area before 5 a.m., 4 a.m., 5 a.m. Trade afterwards, presumably 8 a.m. That's the thing. You enter the trust body once it closes, and you will hold. Okay, you don't have to wait for the price to come back to the FVG. If it comes back to the FVG, you would put your stop loss. Sorry, you would enter the other half. So, example, here in 5 micros, add another 5 micros here once it touches the FVG. Now you're in your full position, for example. Now, suppose that the market doesn't come out to the FVG, it just runs like that. You made your 100 ticks and you're up, right? That's the first change. Again, likewise here, you enter as soon as the chart candle happens, which is right there. Put the stop loss here, but that candle has to close. It cannot just show you, it has to close. You can set alerts and it will show you next algo simply. And you would enter there, stop loss at the high, and UTP can be whatever you want, but I'm going to show you what I personally use. I look for 100 ticks and 200 ticks with break even moving to, with break even happening once I hit 100 ticks. Okay? And look what I'm saying is 100 ticks, 200 ticks. My TP is 200 ticks. 200 ticks. Okay? Even with micros, it's amazing. I'm already trading micros. All right? So now let's continue. So where I actually trade? Nuke AM. Hey, look, we have a chosh here. Why didn't we trade here? Well, one is we do not have a sweep. The sweep is the important thing about this whole thing. Yes, sweep. The chosh just shows us that there's strong institutions backing up, supporting or sponsoring our trade. Right? So here there's no sweep. We didn't go above session high, previous session high, which is London high. Here we did. To this point, where people are looking for longs, market open, market, we manipulate down, we have increased FPG, we're looking for longs. No. Based on our P-Day, we're looking for lower prices. We're simply looking for lower prices. So this movement here is to scare people away, to bring people in. This is Judas swing. This is manipulation move, accumulation, manipulation, distribution. There's multiple ways you can see this. I don't care. You don't have to look at those stuff. You're just looking at previous session high and low. Previous session high, with bearish, overall bearish. Not on daily bias, but weekly, monthly bias is bearish. And it's going to be like that for a long time. So it's not just look tricky for today. Anyway, market 1 minute is up. I don't care. I'm just waiting for a sweep. I got alerted, as you guys saw earlier. Chosh, as soon as the market gives me a chosh or MSS, for example, here, you can see MSS detected. MSS and chosh are synonyms. Lux are the pricing concept. Chosh, it gives me a chosh. Bullish chosh. Previous session, high and low have been swept. It does it all for you. Okay? Internal bearish chosh. I do nothing on the chart. I do nothing on the chart. It printed this out. It printed this chart out for me. It gave me the previous session swept, the high. I immediately go enter. I immediately enter. My stop loss at the swaying high. So how much am I risking for this trade? I'm risking 290 ticks. Hey, look, 290 ticks. That's about $1,400. I can afford that. My combined, my top step account, 50K account allows me $1,000 daily limit loss. Well, have you seen me trade mini yet? Yeah. And I've been making these extraordinary, these unusual, extraterritorial. I'm joking, guys. Some nice profits just using micros. So 290 ticks. Can I afford that with micros? Yes, 290 ticks. If you times it by 5, that's about 1,400. 1,400 something. Well, let's just say 300 ticks, okay? So it's $1,500 worth of risk for this trade. And what do? I use micros. I only trade 5 micros. Minimum 5 micros. How much am I spending for 5 micros? $1,500 divided by 2 is $750. Right? So with 5 micros, my stop loss is $750. Okay? Right? Now that's it. Now what do you target? You target 200. Your TP is, you should be looking for 200 ticks or 1-to-1 RR. Okay? Minimum 1-to-1 RR. I don't look at the RR. I really don't care because this strategy, this here, is extremely high win rate. I've tested it every single trade for the past 3 months. Every single trade. No BS. not picking this, picking that. Every single time I get an alert, I took the trade. I'm not picking my trades because if I have an 80% win rate, that means I have to take the whole 10 trades to be able to count that. I can't just pick much as, oh, I don't like this. Oh, this is too bullish for me to take a short. Oh, this is a beautiful long, but we're very bearish. We're very discount. What is the bullish feature? I don't care. I took every single trade. And this is how we do. This is how you maintain consistency. When you get presented the opportunity, the setup, you take it. You don't get presented the opportunity, you do not take it. And this presents you multiple opportunities. One, two, three, and now a long. And now we're looking for a short. And that target right there, that level has been hit, guys. Right? Hold this out live. Okay? The market will run to these levels. But it's not going to be going up. It's going to find something here to go bring us back down. Not to this swing low, even much more. Okay? Anyway, let's come back to our level. This here is our switch strategy, modified. But it's not enough for modification because if it goes against you, you might lose $750. So what do I do? What do you do? This is what I do. Once I'm in a trade, I take my entry. Hold on. I take my entry and I move. Hold on. I want to see if you guys can still. You guys can still hear me, right? Just want to make sure, guys. This is what I found. All right, awesome. All right. It's simple as 1, 2, 3. A 5-year-old can do this. A 5-year-old can apply this. And you can set the alerts and don't watch the chart. Okay? And you can see as soon as you enter, look, the next candle. You entered here. You entered here. Look. Boom. Done. You entered here. Boom. You entered here. Boom. Of course, it's in London. It will be a bit slower, but you entered here in London and for the long. Boom. That's really 200 ticks. That's really target. If you want to hold too much more, I don't care. You can. 500 ticks. 500 ticks down, 500 ticks up. Anyway, let's not go ahead of ourselves. So you entered here. How can I protect myself much more? How can I protect myself? Because I'm not looking for an RR play. I'm not looking for an RR play. Risk and reward ratio. Sorry, RR, like 1 to 2, 2 to 1, blah, blah, blah. What do I do? When I entered, what did I enter? Let me just move this a bit like this. I entered here, right? I entered here. Sorry, I'll discount the close right now. I would take this, my line, and I would drop it 100 ticks. This is 100 ticks, okay? It's 99. I can't make it 100. It gives you 101. I'll put a line there. And I'll go back to 150. You don't have to do 150, but you can do 150. And your maximum target can be 200, okay? Just like that. Now, once I entered here, once the market goes to 100 ticks, I'm putting my stop loss at break even. Done. And I'm holding it to 200 ticks. Or if I want to hold much longer, I can hold much longer. I have a riskless free trade. And the beauty about this is it will run to your break even. It will run to 100 ticks almost every single time, either the same candle or the next candle. Right here, I have a riskless free trade. I'm already up with one mini, $500, with 5 micros, which I usually trade. I'm up $150. My maximum target is 200 ticks. It will give me $500. Okay, and I've been just doing that. Now, if it hits $200, if you did it in the same single candle, boom, you're up. You already out of your trade. It took you 1, 2 candles. You made 200 ticks. I know people that maybe most people spend like the whole week. If you total everything they do, the total ticks is not even 100 ticks. You just made it with a single candle, okay? And now you made 200. And now suppose it didn't come back to it didn't hit your 200 ticks. You can come back to your break even, and it doesn't really not matter. At this instance, it went to our TP and much more. It went to 500. Right? What you can do is, especially for this instance, for these few days ahead of us, you enter there, you can take 90% close at the 200 ticks, and you can get a small position run to the IPD levels. All right. It worked for this day, for the PM, the London, the whole week. Yes, every single day of the last week, I was holding my ass all the way down, and it can just run to that level. I wouldn't care about any electricity. I wouldn't really care about electricity. It would just dump twice faster. Okay. Anyway, so this is basically different. So now let's do an example for the longest, which is today. This is today. You made $500 500 ticks today on the shorts. I'm not even counting these ones, right? I'm not counting these ones. I'm not counting the trades that I didn't take in London. I was only counting the New York and New York 10. This is 500 ticks. Now, what about the longs? Well, another 500 ticks. Now, that's 1,000 ticks in a single day, guys. Even with micros, with one mini is 5,000 bucks. With micros, it's 2,500 bucks, guys. How much do you ever risk? Pretty much nothing. Because you're almost going to break even almost instantly, and it will not come back to your break even because it's already moved 100 ticks. It's unlikely to do so. And if it does so when you entered, that because we have a church and we have a sweep, it's unlikely to come back down. It has to take a target. It has to come back and take a target. In this instance, we filled this FPG and the swing low. We filled this gap. We took out the swing lows, all of them, and we come back to where just that. Okay. I was expecting to go much lower, but it probably will. Anyway, now let's continue. What about the longs? Well, close this bearish one and the long ones. We have a sweep. We need to move these because these are my levels I highlight for my TPs on break even. Now, what about the longs ones? Well, for the longs, same thing. Sweep, push, FPG for entry, right? I'm excluding the last part. I'm excluding it. If there is one, it's beautiful, but I'm not entering at it. I'm not entering at the FPG. I'm entering at the church candle right now on this candle. And then same thing here. What do? You enter here. 1 second. 200 ticks to the tick. This time it gives the 200 ticks and you're out of the trade, right? So you'll be entering something like this magnetic thing, man. So bloody long. This is the chart. You put your stop loss at the swing low, which is 391 ticks, right? It's fine. We only use micros. You will take as much micros that allows you. For example, 391, let's say it's about 800 bucks, 850 bucks, I think. You still can take on a 50K account. If you have a 100K account, it's even better because you have another opportunity if you get stopped out. But it does not matter. We will go to break even very soon. So at this moment, the market you entered, you're looking for 200 ticks. Okay, you're looking for 200 ticks. Market entered here. You entered there. Market goes up. At 100 ticks, we move to break even, right? Where's 100 ticks? Right there. Put a line there. Put a line there. Once the market goes there, break even. Market went there, I'm immediately in break even. I have a fiscus trade, and then thank God in the same trade, on the same candle, we hit our 200 ticks, and we are out. Okay? Done. Of course, if you use our original strategy, which is a sweep, short FPG, and entered here, that's even better. But what you can do is, you entered here, maybe you're looking for, not 200 ticks, maybe you're looking for, I don't know, this previous session high, which is the London high, right? We're in New York AM, our previous session is London, so London high, right? Well, you entered 5 micros here, the market goes back down into this FPG, which is our original strategy. You can enter on the 5 micros here. Now your entries, your targets, your profits just doubled, right? If you hit your TP, it's doubled. And you're in this risk-free trade anyway. Okay? And it's like that. And of course the market went much more. They come much further. Okay? Simple. Can we know how much further can the market go above this line? Absolutely. Standard deviations. One. What do you think this is, guys? What do you think this is? This is live. I'm not taking a video or replay. I'm showing this guys in front of 30 people right now. And these candles didn't even print. We were talking while it's printed. It went straight to 2. Okay? Straight to 2. Remove this line. You can see right there. It says thinner line. To the tick before you start to reverse. Okay? It's algorithmic. Simple. It's not random. It's to the tick. I know guys missed that word. Anyway. So if you're in a position, you can hold to one standard deviation. You can hold to 2. You can hold to this line. And I'm extremely important that you leave it. Get out of this line. Or anywhere inside this line, right? Anyway, that's just an extra thing. I don't want it to confuse you much more, guys. That is basically the whole thing. So now let's go back and show more examples. Here, New PM, we set previous session low. We bounce around the important level. I don't care. Imagine this level doesn't exist. I don't care about the levels. But we're bearish. Josh, you would enter here on this short, but you won't. Why? Because this is market close. This is the market close. You don't trade here. Sorry, this is the market open. Sorry, market closed here, but the short happened on the market open. You can't catch that trade. That's first of all. Second of all, you don't trade Asia. Trade only the second half of London or New York AM. Okay. Now let's continue. Let's continue with here. Okay. This is Friday. There's someone echoing here. Let me just hold on, I'm sorry about that. Easy, my G. Just because there's background sound coming up. Yeah, I will, Xavier. I will. So previous day, okay? I can remove these lines, so I can show you maybe guys on like a clearer chart, right? Like here. Okay, I'm gonna move everything here. Just leave this, okay? So I'm gonna take just a few more days back in hand, okay? Back to back. No hand cherry picking. Okay? So nuke AM here, right? Nuke AM. I had my levels. I had my IPDA telling me these levels that I have to be targeting. That's my bias. Do I care about the bias? No, you don't have to care about the bias with the strategy. You can still trade it, but you can hold longer if you know the bias. So here, previous session, high, swept. Nice. I'm looking for longs or shorts. We're looking for shorts. Beautiful. The market goes up. We swept the previous session high. We even swept Asia high. Is that good? Is that important? Sorry, is that necessary? No. Is it good? Yes. It's double the thing. We took two session highs up. One is enough for me. Anyway, session high, that's step one. Step two, shush. Stop right there, right? Sure, that's it. That's all I want. That's exactly all I want. I enter right there. Stop loss at the high. I'm risking 320 ticks. With 5 micros, that's about $700, $740. You can take on your 50k account, no problem. Even on Top Step, I think on Apex, you have a 3k daily loss, so not daily loss, a maximum loss, which is good. And you would look for 200 ticks. So this strategy will offer you mostly very big, almost 400 to 500 ticks kind of moves, or break even. Very rarely, like 2 out of 10 trades, it will hit your stop loss. So yeah, this one here, it went to 200 ticks and much more, right? So 200 ticks is here, 200 ticks is here. You already made your money, and you are out. Okay, you are out. Done. And I'm gonna go into the details about this more, but you can target your maximum previous session low is your maximum target, which is 542 ticks, or that level I talked to you guys on the daily, the IPDR level. It was here. IPD, this level here. We were here, guys. We were here. I was targeting this level and this level. We took them all out. Each level is 500 ticks, almost. Pick more or less. This is 1,000 ticks. And of course, it went down to the actual level, which is 1,400 ticks. Zero drawdown in this case, okay? Just like that, okay? Now we're gonna say, yeah. Same thing here. You could have taken. Could you take this trade? You can't. Why? Because we're approaching the previous session now. You can't, okay? Because we expect something here. Even though it worked out, is we have to be systematic, guys. Okay, objective, not subjective. But that was a beautiful trade. It was zero drawdown. It was zero. Yes, yes, we are risking 326. Yes, we're risking 326. But when does it ever come back to there? It doesn't. It doesn't. If it comes back, it's more likely than not. It's just a fullness FPG coming back down. All right, let's continue going on. What about London? What happened in London? In London, we didn't speak neither the low, neither the high. Okay? So no, nothing to do with London. What about Asia? In Asia, we saw previous session low. Short, you entered here, stop loss at the low, and target previous session high. Not previous session high. Target your 200 ticks, which is here. And make sure to move your stop loss at break even. So after 100 ticks, maybe you move your stop loss to break even. I don't know if we got tapped out here. Maybe we got tapped out stop loss at break even. But I don't care. I don't trading Asia anyway. Now let's continue. Consider market just keeps going down. What was I gonna say? Okay. So here, new PM. We stopped previous session low. Charge. You entered at the charge. You didn't get stopped out. I took this trade. I didn't get stopped out. I made quite a good hit. I don't know how I made it, but I got late to this charge. I entered somewhere around here. Anyway, what I'm trying to say is, I got stopped out at little bit near break even. This is where the market closed on this candle. Okay, I was not stopped out yet. It closed me out somewhere on this candle here. Okay, because the market closed. It was a really late trade. Anyway, nuke AM. We didn't get an opportunity, but we got a chosh. Creep chosh. FEG, which is beautiful. You entered at the chosh candle itself, not the FEG. You entered the chosh. Okay, you put your stop loss at the low. 259 ticks. It's averaging about 200 to 390 ticks usually, which is you're compatible with any account size. You would look for 200 ticks. Okay, yeah, just like that. Okay, you entered here. Stop loss. Most go to zero once you hit 100 ticks, which is right there. Okay, once you're right there, and of course the market didn't come back down. It went straight to UTP. If you held longer, it's 400 ticks. If you can see, most of the time it goes to 400 to 500 ticks. That is insane, guys. You can hold one micro and it will still pay you great. I just don't because I have other extracurricular stuff I have to do. I'm content with my 200 ticks, okay? Content. Now, I'm gonna do like Tillion. I have 3 extra phase. Now we can do more. I think. Let's copy them, right? 300 to 500 bucks a day. It's beautiful, right? Copy it to 3 accounts. Or on Apex, you can do 20 accounts. It's insane. Now here, in London, what did we do in London? We swept previous session high. Previous session high. Let me time this off. We swept previous session high. Here did we sweep it? Yes, we swept it. But this year, both London, both Europe and New York, people are sleeping. Right? It's midnight 1 a.m. and for me it's about 6 7 a.m. in London in Turkey time. I'm not awake. I'm awake up just around mid-noon. So is America. America's still not awake by then. America's woke up around somewhere around here. So everybody's sleeping here. So do not take this first signal. I'm awake here. Josh, sleep. Josh, see about 3 a.m. Almost every single day, by the way. At 3 a.m. there's a charge. And that's because I told you guys 2 to 5 a.m. is where the market 70% of the time it will leave a high. That's an order. Anyway, it's not coincidence. This chart I'm maintaining on this candle. Top at the high. Now, if you wanted to use original strategy, sweep, charge FVG, enter at the FVG, you can. You would get probably how much of a difference? Maybe 26 ticks difference. I'm fine. I'm fine in disregarding that. I would enter here, it goes there, and then it would run straight to 280 ticks. I don't care. I'm looking for 200 ticks. Once it hits my 100 ticks, I'm moving my stop loss to break even. I'm restless. Can it come back to my break even? Oh, I'm getting so many break evens. No, it's not coming at break evens because I'm already 100 ticks away. And then of course it will go straight to my TP 200 ticks, and I'm out. 200 ticks, regardless of what size you use. 200 ticks is insane. Now, of course, if you held this trade, the previous session, no, it would have hit, and you can see how much further it went. Right? You can see how much further it went. 774 ticks. Right? Because we know the bias is lower, so the market is more likely to draw down. So every time the market goes up, it's to take out a high. Okay. Every time the market goes up, to take out the high. Every time the market goes up, is to take out these highs, and it will flush. Right? Every time the market goes up, to take out this high. Every time the market goes up, to take out this high to go down. Every time the market goes up, take out this high to continue going down, etc. Okay, because these levels, IPDA levels that we tried earlier, will drag the market down. Now, these levels that we use may not become as strong anymore, but you should be looking for these ones. This level, this volume imbalance, this FPG, and this level, right? So we're still holding the 2 standard deviation level. Probably will form a structure here. What am I in the structure? You can tell already before the setup happens. You can see. Okay, here to get a charge, we have to form a swing low. Do we have any swing low from here to here? No, this is the first one. It's too far away. So the market, what do you think the market is going to do? The market is going to chill here, like it did here. It will drop instantly, form a swing low, go up, then drop again. It will generate the swing low. It will generate it here. So you can be awaiting it. If you see actually the market is starting to form a swing low, then you're going to be like, damn, that's going to be a nice swing. Once you get the charge, you take the trade and you'll be out of there very soon. Anyway, so let's continue. Just do a few more examples. It's been too much. I've been talking too much and talking too much too long to read, but just promise you guys with my heart, just stick to this, and even if you're a 5-year-old, you'll be profitable. Okay. Now, okay. So what about longs? Why didn't we take any longs here? We got charged. No, because we didn't speak previous session low. Just London has to go below previous session low. We didn't. What about this one? Oh, we didn't think about this one. Right here. What about this strategy here? What about here? Not nuke AM. What did we do? Nuke AM. Beautiful, guys. Beautiful. Sweep of the previous session high. Chosh, you entered the chosh. Okay. Right there. Top of the high, how much are we testing? 292 pips. Okay. How much did the market go down? 1,100 pips. This is the same single session. Your maximum target previous session low, which is this, which is 471 pips. So you have to keep in your mind that I can milk out of this trade maximum 471 pips. This is a big number. This is an extremely big number. It's rarely that there's about 5 to 10% of people in the world that can actually aim for that level. Anyway, yeah, you can see you entered here, and the market runs straight to UPP. Where's on the ticks? Where's on the ticks, Luke? On the ticks is right here. On the same time that you entered, you're already up on the ticks. So I don't know. I know some of you might just do this. As soon as I get a church, I'm gonna go in with 10 contracts. It's gonna run straight to 100 PP, 100 ticks TP, and 100 ticks times 10 contracts is, oh my god, man, what is shit? One contract is 500, 5,000 bucks in literally 1 minute. I'm pretty sure probably some of you will do that. And you can probably get lucky with it and actually it happens. Right? I don't recommend that, right? Maybe 1 minute is even enough, but I'm looking for my 5 contracts is enough for me because I can get out whenever I want. Now, I entered here on this track right now. 100 ticks is, 100 ticks was, we said it was here. All right, now we move stop loss to break even. Okay, and we target 200 ticks. Was that 200 ticks? Right there. Right there. Boom. Same one candle, second candle amount. Sorry, same candle. Hit my break even and my TP. Done. Then, do I care about the rest of the move? No. Do you want to hold the rest of the move? Sure. But just take profits. Make sure because you're in the rest of the free trade. You don't even have to close that 200 ticks. I'm just not trying to be greedy. This really gives you win rate. Okay, I'm not looking for an instant scalp of 20 ticks. I'm looking for instant scalp of 200 ticks. Okay, that's insane, right? Anyway, beautiful. Here we set previous session low. So what do you expect we should do? We should be looking for longs like that. So previous session low. So beautiful. You entered that on this candle right there. It's supposed to be here. Okay. Just you get the idea, okay? And you're looking for 200 ticks trade. Okay? 200 ticks there. Just come. Okay? Like that, guys. It's like that. Yeah, so you have 200 trades. Okay? Keep in mind the break even. You might have hit your break even here. Let's have a look. Stop loss here. Once we hit 100 ticks, you'll be looking for break even. Break even for your finger. Right there. Okay, we hit 100 ticks there. So remember a stop loss to break even. Boom. And we got stop loss and break even 0. No problem. Okay. And the market, of course, hit our target, fine. But if you hit your break even, it means the market is not likely to go to your target. It's most likely just to go a little bit up and then reverse. It went to your target, yes, your target, but it just shows you the bias that market is able to come back down 100 ticks. It shouldn't be able to. And you can see the market went even lower, all right? Still, oh my God. Didn't stop you out. And of course, probably you would have hit your target anyway. But that's just overstretching it. You would have called this trade as a break even, okay? Let's do one more for the sake of this. Here, the same trade here. We took a break-even trade here, which actually, maybe you can close some of your position at 500 ticks, right? So it hit 100 ticks, you close like halfway position, move stop loss to break-even. It's up to you. It's all winners. It's just how you want to define it. This is how it works for me. That's what I'm applying. So here is a break-even trade. Here we had a 500 ticks trade, but let's not fish out. Let's just say we made our 200 ticks trade here. Beautiful 200 ticks trade here. What about Josh? The same thing, doing the same thing. We are awake here at 3 a.m. New York time. For that people in Europe. For those who are not, you have got this bad trade. And of course, you would have this. Stop loss at break even. So this one and target 200 ticks. Right? With stop loss to break even. We didn't get stop loss to break even until 100 ticks. 100 ticks is around here. Yeah, it didn't come back to break even. So this was a winning trade. So we make 200 ticks here, 200 ticks trade. and you should be down. Even if you took this trade here, you stopped getting such a high trust, you would have a bad trade. But none of us are awake here. So why do we include this into our strategy? Oh, to look better, to show better results? No. These results are going to affect your account balance. We're only going to be, we're a team and a family, so we're only going to be making fun of each other, right? Like, so what's the point? Right? So here, beautiful trades. And I'm just saying the bare minimum, guys. Here would have made you 300 ticks, even much more, 350 ticks. Here would have made you 1,500 ticks to the tick. Okay? That's it. If you base on this whole day, if you just held this whole day, you didn't have to trade the rest of the month. Why would you? Okay, and you guys can continue trading. Look, where did we leave off? Where did we leave off? At 17 April. So a whole week, we tested a whole, not really, just 2 days, 2 trading days. Go on your chart and back test every single thing on the back. Everything test. Look at New York PM, take your trades. New York AM, London. I don't know if you want to check Asia, but don't check Asia. New York AM, London, Asia. Look, even Asia is doing good. New York PM, Josh, but the market would close here, etc., right? London, you can solve beautifully. Anyway, go back to 17 April and then back this with yourself. Not back this, just do it yourself. Go on, as soon as the candle closes with a chosh, like it's not showing chosh right now. The 5 minute candle has to close with the chosh written over it. Then you would enter immediately. Okay? Give this a test, guys. I promise. It's not financial advice, but I promise you gotta be insanely relaxed because the market will just move in your direction. You're in micros, but still making the same amount of money you would have made if you're trading millions, right? Most of us trading millions are looking for like 300, 250 bucks a day, 400 bucks a day, 500 bucks a day if you're shifting it. You're making that with micros, right? And it's fast. It's really fast. Really fast. It will allow you to see a stop loss there. And if you decide to hold much longer, you can, right? Maybe you can enter 5 micros. You can close one micro in, one micro in, one micro in, one micro in. Up to you. I know Legend does something like that, and he's killing it. Like he went from making 100 to 100 bucks a day for a day to 3K, 4K a day. Like he's honestly beat that. The student became the master, I think. So I'm really proud of him. So is Trelawney. Trelawney just banking on 100 bucks, 200 bucks trades, but times they go by 20. So is just the other guys, Sean, and they're making money, right? You saw the account balances, guys. Here's the account balances. These are all using micros, 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 micros. Okay? I'm starting to use top step X because now we can use the micros. This is a life changer. I'm not using my trading view accounts. I just want to focus on here. Okay? So this account here, where is it? This account here. Yeah, so we'll probably pass this account like today. I just got it and I have 3 more that I can pass. I haven't touched them yet. By the way, this is a blown out account. This is not today. This is let me show you. This is a blown account. It's ineligible accounts. I was just testing the thingy. It's a blown out account. You can see below the maximum thing by a lot. So I was just testing the what do you call it, guys? The mini to rate ratio. Like if I can trade on this account, like just like this one, you can still trade it. Like you can do this. Even though it's blown out, you can still trade it and you can do more. It's so fun. Like I'm on 4 contracts right now. Right? These are blown accounts, but you can still trade them. They're the practice accounts, okay? Don't get the idea wrong. Anyway, now let's go back to what I was saying. Yeah, this is a game changer, okay? Now, guys, if for those who want to stick to the original strategy, no problem. Let's say you have, like you took a shot, okay, like here, you took a shot at the chosh, and then it's gone your way, and you came back to this FVG. You can add another position to your entry here. You can grow your account. It's fine. It's absolutely fine. The whole point of this modification is that if the market, it's an if not condition. If the market doesn't come back to my FVG, then I'm still in the trade. If it does, then that's all the better. I can add multiple positions. I can add maybe another few contracts in, maybe another 5 micros. Or maybe I'm in, yeah. So then 5 mark, I'm back into 1 minute. And your average and this will become almost half because your entry here, your entry stop loss here, average entry is here, right? Just like that. Use it, practice it, try it. Try it live on the exercise, okay? Just try it. Copy it, okay? Copy it with 5 accounts, 3 accounts, 3 accounts. Don't even copy it, okay? This is what I have to show you guys. So now let's go back to our levels. What did we do? We're still now look here. You see guys what the market is doing? Let me turn this off. The market cannot reverse down. It cannot go reverse down. It has to form a spectre. What's a spectre? Here. Low, high. This is swing low. The market high, 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 low, higher, high. And if you break low below this line here becomes a choice. This line here becomes an MSS. Right? We can anticipate it before it happens. Doesn't mean you have to watch the chart. It just means what you're planning ahead is happening. While we're here, we said the market is gonna gravitate to this level, this IPDA level. It did. While I said here, the market is gonna start to reverse at the two standard deviation. We pick the standard deviation from this low to this high, because it's a low, lower low, higher high. This candle here is the bullish breaker block, right? The price respected it here. But I'm not looking at it as a breaker block. I'm looking at it for standard deviations. From this low to this high, for the high of the breaker block, extend it up 1 to 2 standard deviations. You saw that we got exactly to the tick, the market reversed to the tick right there. And it formed a swing low on that candle. It just shows you, okay, this is algorithmic. The algorithm is saying go to standard deviation, form a swing low, and then the space below it, and then take us to our target. Something like that. This is how it's being instructed, right? It may not do it right here. Maybe it will converse. But right here, this is a chart. Potential. Okay? Potential right there on this line. Market drops down here. You'll be like, okay, I'll wait for the candle to close. I'll go 5 micros and I will target 200 ticks. Let's say this is how the scenario goes. I would target what? I would target this level, or hold all the way to down. Or my previous session low, which is the maximum target here, which is 100,000 ticks. Right? Yeah. But now what I'm waiting for actually is to take out these highs right now. Finally, we took out this high. Anybody being short was trading their stops. They took out this high right there. Okay. So the market will now, anytime we form a swing low and form a chosh, it's likely to play out. Why? Because we are taking out liquidity of anybody that's been shorting in a bearish market. So they can't take them out of the game and they continue going on. Right? Look at this level right there. Okay, this whole move. That will go up to there. That will just say, but we can, absolutely can. Our eyes right now is on this 5-minute swing low. Okay? 5-minute swing low. So you can see everything we do is in advance. Everything we do is we're doing in advance. We're planning everything out before it happens, and we'll pick the trade. Even if you don't, you will just go, do your work, do your homework, learn your German like me, go to your hospital, go to your nursing, like, what's it called, like Corona, or helping your family, or I don't know, like a business, whatever. And if you get price highs crossed on that previous session, low, nice. You still don't have to look at the chart. You don't have to look at the chart. Now you will wait for internet bullish chart. Boom. Previous session low. Swept, nice. I'm still working. I'm still with my family. I'm still with my hobby. I'm still watching the cinema. I'm still in the toilet. I don't care. Yes, internet bullish chart happen. Boom. You go on your chart. You click. Yes. Oh, yes. Just boom. Internet done. Take out 200 ticks. Problem. Whether all break even, or 200 ticks, or if it comes back to break to our FAG, we can enter another position there and hold maximum to previous session high, or to this line, whatever you want. Okay, so it's all completely up to you. All right, guys. So any questions, guys? If you got questions, please write in this journal so I can help answer it. My Fisher's friend, so I have room to speak a little bit more. But this topic we hear, everybody here, even if you're a pro, even if you're a beginner, or a pro, or a professional, or a DJ, or a mastermind, use this. You can use this. Okay? Suppose you're waiting for your stuff, your setup, it didn't happen, but you saw this one. Take it, believe it, and use your skills to hold the trade longer. I just showed you every single trade we took went at least to 300 to 500 to 600 to 700 ticks. And without waiting. Did you see any waiting? Did you see any consolidation? We entered here, we're already up 200 bucks. Sorry, we're already up 200 ticks. So with 1 minute, that's 1,000 bucks. Let's do a slowdown. 1,000 bucks, you're done. 1,000 bucks, you're done. Okay? Here, on this short, you entered there, right? Zero drawdown. Look, zero, 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 zero. When you enter the trade, it will say 0, 0. It will not say negative $3 or something like that. So, and boom, hit your target, done. Three min, 1 min, 2 min. Of course, but that's yeah, but you want it for like what's the deal? I promise I will buy a better mic, but you guys have to buy a thing. Every time I buy one, it doesn't work. I bought a microphone and you can't even plug it into my laptop. It's a different jack. Yes, David, I will send my thing. Go ahead, yeah, but I'm saying already. Switch strategies one of the best you can learn. Thank you, P. Jones. Combining it with grade levels, dude. Can you go over how we draw the levels, the red lines? I already covered it at the start of the video. It's ITDA, but I'm going to show you guys a trick to not do it manually. To not do it manually. All you have to do is go to the daily, turn everything off, anchored IPDA by 2 degrees, turn it on. Okay, turn it on. And just make it only for the budget. Okay, now you see here, you can change the colors of this. The low of the 60 days is here. What is the high of the 60 days? Right there. Right? Now, use quadrants. Same thing. What about this is the 40 day. So the low of the 40 day, this is here to here. Okay. Again, 20 days, this is swing low, this is swing high. These are your levels, okay? That's how we can draw them. Now, what I want you to do is, I want you to draw the levels that we didn't take that are within this huge big box, which is the 60 days. We have this level we didn't take out. We have this level which we took out Friday. We have this level we didn't take right there. Okay? What else do we have? What else do we have? We have this order block. This is bullish order block. We have this FPG. That is enough for this 60 days, for this look back, for this set of instructions that have been instructed and fed to the algorithm. These two are the only thing left. Sorry, I understand. Are the only thing left for the algorithm to do. It only has to do this in the next few days or until the look back period, so 24 or 60 days. For this remaining 60 days, it has to come back somewhere in form, do its job here. Okay? It has 3 targets. 1, 2, the swing low, 4, and that 5. 5 targets, sorry. Okay? Every day, look for 1. So how would you base your trades? Like I said, using a skip strategy. If it's in a short setup, you can hold all the way down. If it's a long, try to get 200 ticks, like I showed you guys. Or just always 200 ticks. Always 200 ticks, okay? Just start like that. Then you can modify up to your liking. Now, one thing I want to say is, the market, what does it do? The candle's open. Let's have a look. Here, from after we form the chart, which is right there, on this candle, what we have a shift instruction. What do? We open the candle, the daily candle here. We pump up, we look up, drop down, close below the close, near the low. What do we do here? We open, we manipulate up, then we close below. We have this type of candle here. Fine. Next day, we open, we go up, manipulate up, then we manipulate up, manipulate up, then we distribute down, and we close below next to the low. We manipulate up, next day, go down, close next to the low. We manipulate up, we go down, close next to the low. Today, we have a green candle, so probably like a different side of candles. Or it's just gonna go up into this option here. And by the time that happens for tomorrow's new AM session, we put around there, we can be looking for short. Because everything here is balanced except this level here. and this FUG right now. We won't come back to that area, right? We won't, not yet. Not until at least one of these levels, at least this FUG. You have to find a bounce of this FUG, at least. Combine it with this order block, you can start looking to form these bullish, bullish setups. So right now we're bearish. So now how can we use the look forward to help us? So at 20 days, we expected the market to start reversing. It formed the actual thing. It, it did it right there at 20 days. It started this whole drop down. Okay, so we took out these targets. Okay, but imagine this 20 days was somewhere right here. Next to this IPDA, this bullish efficient, bullish efficient, bullish order block, combined with a slow, low, higher, high, bullish breaker block, then this movement here, this candle here, I can expect it to be the reversal point all the way up here. You get what I mean? But we did it in a few days delayed, right? A few days after we say, if I check how many days that is, it's about 4 days, okay? 4 business days. 4 business days and four daily days. So it's a bit off target right now, right? Otherwise, if this 20 days was something around here, I would use this as a reversal point, and then we'll bring the market up a little bit, maybe up, take out any swing high, maybe this FUV or this swing high, right? But it didn't. It just shows us that, okay, the algorithm wants to complete its business during the 40 days. So right now we have how many days more? We have about 15 days more for the algorithm to finish its job for this cycle and open a new one. Okay. Maybe at 40 days, at 20 days, we expect a bullish sector, like a bullish a bullish change of character, a bullish market sector shift, like the one bearish we found here. We expect at 20 days, one right here, or at 40 days, or at 60 days. Whichever one gives us it, will most likely be in the market will conclude us. So if it gives us at 20 days, we expect that means we're going to be bullish on a short term. If it gives it at the 40 days, it means we're going to be on bullish for the midterm. If it gives me for the 60 days, it means we're going to be bullish, maybe even make all-time highs. All right? That's how we can use it. So drop these levels on your chart so you don't forget it. Okay? Now, one more thing I wanted to show was if I move from previous, so today is today, you always look back, it's always from the candle before, so from the previous day, right? You always look for previous day, low previous day, high previous week, low previous week, high. You don't look for the current day low, right? The current day, because this changes. So from the previous day, this is something extra, okay? If you go back 20 days, this is extra. You don't have to use it. It's just to astonish you guys. What do you see up there? It's the all-time high. It's the time. It's the highest candle there is. The 20 days. Can you see it right there? Yeah, this is from today. From today. Now, if I go 40 days back, what do you see, guys? Okay. What do you see? Let me tell you something. This swing low here. Swing high. Swing low. Low, low, lower high. So here we've started actually the bullish, the chosh. Here we've started this. We would anchor if we were back here. I would anchor this the anchoring point at this chosh, and I will be looking for a pullback. So, for example, just to show you guys, I will take this here. But first, let me show you guys the 60 days. 60 days is this high. It's always a low or high. It's always low or high. Okay. That's how you can confirm. That's something extra. It's nothing to do with what we've been doing. Now, let's say we've been bullish. Okay, we've been bullish, and we're somewhere around here. Okay. Well, this is the latest chosh. We have low, lower low, higher high. Okay. So we formed the chosh. So low, low. Wait. It's, I'm confused. Low, lower low. We took the 22, and we took the swing high. Okay, great. We'll anchor our thing. Here. Where is it? Well, Okay? Okay, sorry to show you. Okay, so what do you see? What do you see, guys? Let me tell you what. This is our income rate. Okay? 20 days, 40 days, 60 days. You can see 20 days, this is the low, 40 days, this is the low, 60 days, this is the low. But look forward. I'm trying to show you what guys look happen forward, so you can use any terms. The market goes at 20 days, it formed the swing low that we actually formed this short. Remember, guys? At 20 days, it formed the change of character to the tick, to the same tick, to the day. Maybe, I don't know. Yeah, to the day. This day closes. So this, we're looking at here. This is 20 days. Okay, this is, oh, you can see the gray line. This is 20 days. Did it there. Okay, done. What about 40 days? At 40 days, it did nothing because it already did the change here. So now we wait for 60 days and see what happens in 60 days. We're trying to probably get bullish Josh from here to 60 days, which is also the same level that we checked. Remember this level? Remember this level? This is the same level. This is the same projection we did on when we used the bearish ones. This is the 40 level. You see? Using this random chart right here, this random chart we used here, which is 17 January, it somehow gave us that reversal point for the remaining months to the tick, and this showed us the same rejection level endpoint that is 4 days later. Right? It's the algorithm. This is one of the strongest things I can show you guys about the algorithm. It's beautiful. So you can now have an aim. Okay, in 2 days, in 13th of May, from now to 13th of May, I'm looking for a bullish choice. If I get it, I'm gonna be holding this trade. If I'm a holder, like if I hold positions overnight and like swing scalper, I can hold the whole month. If I'm just looking for longs, then what do you do? Sorry, if I'm just looking for like XFAs and Apex and stuff like that, what you can do is open up the candle, manipulate down. Let's say we have a chart like this. Let's say we have a chart like here. Okay, hold on. Let's say we have a chart. What do? You can do this. We open here, manipulate down. You can be buying here or can do it today because next to the day. Next day, open here, buy in below the open, sell next to the close. Buy here next to the open, sell next to the close, or just high. Probably not gonna hold to the close. Just move here, we'll close it out. Buy next to the low, close above the high. It's above next to close. Buy below the low, buy below the open, close below the high. Buy below the low, buy below the open, close below the high. Okay, these are big moves. This is 30,000 ticks, okay? Or just find the switch strategy and just keep taking the long signal only, right? So now we have a bias, we have targets, we have unused targets, which the algorithm will refer back to them. It has to refer back to them. It's coded to do so, okay? It might do it with this fastness. It might just go to the breaker to go back in to fill something. For example, here, what do we have? We have this bearish FEG. But it's not really a bearish FEG yet because this candle has to close for this daily FEG to work out. But what I'm looking for actually is this bearish volume balance. Okay. Now, I promise you guys to show you guys one thing before I finish, and that's called. What's it called, guys? What's it called? Dealing range. Okay, this is dealing range is important, guys. For anybody trading, whatever strategy you're trading, it is important that you understand this concept, how to do it. Because anybody, if I open the chart and tell you guys, draw me the swing low, swing high. Look what it is this from the swing high. If I tell you draw the swing low and swing high, you're gonna be like, this low, this high. Right? Probably gonna be like this. Or if we do something like this, which high do I use? Oh, maybe this low and this high. Or this high. No, guys, no. This is important to understand because the algorithm on the lower time frame, because time is a factor, it's going to refer to PD arrays like FPG, order blocks, equilibrium, blah, 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 based on the bias. If you know the bias, then great, your dealing range will work. If you don't know the bias, the dealing range will not work. Okay? The dealing range will not work. Simply, the dealing range will not work. Okay, let's hold on, guys. I want to see where this is going. By the way. Oh, it even came back to this level, guys. Came back to this level. I removed the screenshots here, but remember there was a level that we rejected for here and the other one here. Anyway, what was I gonna say? Huh. Okay, dealing range. So here is something. How do you draw a dealing range? A dealing range is defined with the current range or where we are from the market, from this high to this low. No, you have to define a swing high and swing low, and the swing high, both the swing high and the swing low have to be split. So here we have a swing low, here we have a swing high. Suppose we use something like this. We have a swing low or swing high. Okay, let me turn this off. Swing low and swing high. Okay. Now this is not your dealing range. What's the dealing range? Once we go above this range, this box here, once we sweep the high of it and the low of it, this becomes our dealing range. This is our dealing. Okay. What did I do? I'll try to give a better example soon. Okay. This becomes your dealing range. So this is equilibrium. This would be premium, this would be discount, etc. etc. As the market goes further, you can extend this one. Okay? But we define that based on this level, this range here, we define our dealing range. Okay? PDA is you want to be buying anywhere in discount. So if I extend this out like this, you can see how we respect that discount right there. I'm not a support from resistance, support kind of player. If I'm looking for bullishness, I'm going to use this as support. I don't care if it does this move here. I'm using this if we go above equilibrium, or if we touch the equilibrium, I'm using it as support. Nothing else. Okay? Because I'm looking for bullish. If I'm looking for bearishness, I'm looking for only this kind. Sorry, only as premium. So you see, we have low, lower, low, higher, high. This is a break. The block price comes back to it. Other than that, we have this order block, which is in a discount, which is near the equilibrium. Price comes back to it to test the opening body of it, the opening price of this order block. At the equilibrium, with another order block forward, don't worry about that. You will enter here. This is your last final chance. And this break right there is your final chance to take any longs. Your final chance. Okay? This is the order block. You can be buying here. You can be buying at the retail surface. You can be buying inside this FVG. You cannot buy inside. You cannot be buying inside this FVG. It has to be below the equilibrium of this daily range. Okay. Now, if I do this, we have a swing rope. So we have a chart. This is actually a chart as well. So we have a low, high, lower, low, high, high. So this is actually a chart as well. I don't know why that's how they didn't do it. But manually, you should be able to find it. Let's have a look. Oh my God, 1 second. Okay. There you go. So this is actually a choice. By the time you'll be able to recognize. You don't have to depend on it, but you can see, by experience, you can tell this is a choice, right? Anyway, what are we looking for? This is the dealing range. This is discount. This is equilibrium. So this is premium. This is the equilibrium. This is the midline. Okay. You can be. How do I use the optimal trading entry? I see so many people talk about opening trading entry, but I don't know where to define it. Do I put it from here to here? Do I put it from here to here? Or from here to there? No. You have to first define the dealing range, and that dealing range, those levels will be respected. You can see this 0.62 to 0.79 is your optimal trading entry. And if you're going to be extra fancy and spicy, put the 0.705 on it. And of course, it didn't come back to it, but it came very short. You can be fine inside the 0.62. So once we form the chart right there, come back down, you can be entering at 0.62. That's the optimal trading entry. Anywhere inside this range is good. This FVG, it may not come back to it. That's why you can use these levels to enter. Or if you don't want to use the optimal trading entry, so optimal trading entry is one entry. This order block entry is another entry. This FVG is another entry. That's 4. Entering at the equilibrium is 5. Break a block low, low, higher, high. This has been three candles, consecutively three candles. Because all three of them are green, you will use them as a whole breaker. If it was red, red, green, you will only use this one. Okay. So order block is not the lowest candle or the highest, lowest down candle or the highest. Sorry, the lowest down candle and the highest up candle for a bearish one. So this here is a bearish order block, but this whole thing is a bearish order block, not just the highest green candle. This lowest candle is not the order block. This whole three triple candles is the order block. Okay. Anyway, what was I going to say? So six different ways to enter the market. What else can we use to get into the market? Well, this is the order block. It's in the discount. It's an order block. The market, this green red candle came back to it. It tapped it and closed above it. This makes this candle a what? A propulsion order block. So as soon as we close above it, the market, the price will be propelled very fast, very efficient, very distant. You can see how fast the market goes up. Now you look, why are you just saying random words or just picking this one? Well, this is the order block we've been talking about. How do we define the propulsion order block? Do we have to use it? No, I'm just teaching you so many ways to enter the market. There's 80 different ways to enter the market. All you have to do, the only thing that is missing, guys, is the dealing range. If you don't know your dealing range, you're going to probably be entering up, I don't know, this order block here and saying it's going to be a bearish order block. Boom, price is just above it. Right? You don't know. You have to define the dealing range, then everything will, anything will be up to you. Okay? You can see, we will never close, not never, but for this trade, we will not close below the midpoint of this order block. Why? Because this is a propulsion order block. The algorithm will not allow it. You can see we close it up to the middle. We closed above it. This is a propulsion order block. So you can be entering here with your stop loss right here. Right there, just below it. It will not come back there. If it does come back there, it's going to take out this car and going to go all the way down there. And you can see our price is propelled very fast, right? There's multiple ways to enter the market. Multiple ways. Anyway, what else is there? Oh, good. What else? We have low, higher, high. This is a break of luck. We have this Fiji. This is a unicorn entry. Right? Oh, look, what else is there? Since this is the equilibrium, where's the equilibrium? Equilibrium was right here. This is a bearish FVG, can into IFVG. This is the inverse FVG. Yes, we're buying. We're using this as support. Look how accurate it is. We're using a bearish FVG, for goodness sake, as a support. What the hell, Luke? Simple. And etc. Yeah, I think that's all I have to say for today. Dealing range is important. Very, very, very important. Let me show you another example. You have a low, a high, okay? Once you take out this high, and you take out this low, from this low to this high, of course, if the candles keep printing, you can extend it up. You will draw your dealing range. Okay, this will become your dealing range. This is not a dealing range. This is not a dealing range. This low, take out this low, but this high didn't take out this high. This is not a dealing range. So suppose you have a chart like this. Okay. Oh, nice. We have a low, we have a high, we have a swing low, we have a swing high. Nice. We have an FVG here. Oh, let's put Fibonacci from here to here. Let's find the discounted FVG and let's enter it. Oops. Oh, here's a British FVG. Okay. Well, what do you think happened? What do you think happened, guys? Oh, and what else is there? What else is there, guys? We have a bullish order block. Look at the bullish order block. We have bullish order block with a bullish FVG. Oh my god, guys. We have a high probability order block. I'm gonna go all in here. Boom. Out of all these candles, this is the strongest candle that cracked through it. Right? Because this is the dealing range. For this to be a dealing range, we have to take out this high. And this low. We took out the low. We didn't take that down. Okay? So that's how you know if your video is going to work or not. Use it. Whatever strategy you use. Even if you don't use the script strategy, use it. Use it. Yeah, this is this a thingy? Yeah, because we took it like that. What about this? Is this thing? No. Because this low and this high, we took out this high, but we didn't take out this low. Right? There's no other swings. So this is not a dealing range. You cannot look at it as a dealing range. Anyway, guys. Just from 1 minute. We do not look at 1 minute, brother. 1 minute you will have a lot of fake outs, which may be unnecessary. The 5 minute is more than enough. Look, I promise you, you're gonna have more trades than you can handle. You're gonna be like, dang, I'm supposed to take every single trade, and I got like 5, 6 different trades. You're gonna be like, I have to keep. Now I have to take this trade because I have to stay consistent to my strategy. You're gonna get to that point. I promise you. It's much faster than the usual trade strategy. Why? Because we're not waiting for that pullback to that FPV. We're not waiting for this pullback to this FPV. We're entering it. We're not waiting for a pullback. We're not waiting to pull out. Like, from entry to pullback, it's about 55 minutes. We're not waiting. We're entering, getting out. We're entering, getting out. We're entering, we get out. Okay? So now it's much, much faster, much more opportunities, much more trades, and they're all beautiful. I'm show the stats and I'll continue updating. You guys can continue go ahead and take a screenshot of the log of the accounts that I took, and we'll stay as transparent as we can. I've extended this call very much because I haven't spoken to you guys a lot, and I've missed you guys, and I've felt like I have to share with you guys some stuff. And I always come bearing some good stuff, secret sources, because secret sources are good, like all the goods. How about that? Yeah, like the IPDA, please put on NQ, put on ES, put on GC, put on BTC for goodness sake. I told you guys, look at tomorrow BTC, okay? At BTC, where's BTC? This is BTC, right? So here, it's a beautiful short pig, right? Anywhere from this 0.50, from here to this swing high, is a potential short opportunity for the Bitcoin, right? Because the algorithm has to come back and take all this. And yes, there's an algorithm on Bitcoin because there's the ETFs. The ETFs, they run on the algorithm. Any more questions, guys? I think I've said so much stuff here, but you're more than welcome to ask questions. It's as simple as 1, 2, 3. You go on the daily one, any candle, any chart you want. You go on the any chart you want, turn everything off, okay? And you will look for the most obvious nearest tweet, sorry, chart, okay? The most obvious. This is the most obvious and the most latest. This is the most latest. This just happened here. We have a high, higher high, lower low. So this here, you would anchor the video away right now. Slide it from here to this line. Done. Now we have the projections for the forward, where we expect the market to reverse, and we have for the reverse. And just go ahead and just label these things. Well, just like that. Now you have yourself some levels. You can go ahead and put your quadrants to get more levels for the 60, for the 40, for the 20. For the 20, for the 40. For the 20, the high is here. Now go on the 5 minute. And you get yourself beautiful levels. Look at these levels. Look at these levels. You can be short in here, down here, short in here, down here. Look at these levels, okay? The market goes up. On Bitcoin, we set premium session high, new AM. We form the chart. You would enter on this chart, like that. And we broke this level. So you can be targeting this level for the start. I don't know. And you can be going for this level. Or maximum TP between session now. Just like that, guys. Just like that. Even crypto, look. London stop premium session high. So enter the chart. Boom. New York stop premium session high. Did it? Yeah, it did. Enter the chart. Boom. Fast. It's fast. It's really fast. You don't wait. You do not wait. This is not a chart because we didn't stop premium session high. Discounted it. Here, same thing here. It's like that. Okay? Alright, I spoke too much now. Okay. You guys have questions? I went over all the block, I went over healing range, I went over IPD, I went over our modified, much refined script strategy.
Bro, are y'all serious?
tax regions, and with pigeons he has his levels offered much more uh, leniency when it comes to targets. So you can target more than one target using pigeons. So combined government influence with influence and confluence of the state strategy, and what I thought in here, you guys can be, I feel like, can be making money, a lot of money,
Why? These are real
depending on
levels.
nobody.
This shit.
Not me, not nobody, nobody, okay? So
Damn.
I just find.
Those are the middle.
Also, I apologize because some people just watching football matches and they just keep, they don't get excited about football matches. I don't know, it's getting ridiculous. You're welcome, Hamza. Xavier. Thanks, Stephen, once again. Thanks, Fat. Vodka 1234. Uh, I appreciate you guys staying with me for like 3 hours now. God damn. But please go apply today, right now. Okay? Wait for that PM system. Trust, sorry, trust. Wait for that Bitcoin setup. Wait for Bitcoin tomorrow, where it's supposed to be something fancy, something funny. You're welcome, King Liana. Welcome, G. You're welcome, T. Vivek. Really, you're welcome, brother. I hope Sing or Legend recorded this. Because I'm missing out for it. You're welcome, nigga. Go ahead and apply and then ask me your questions right now. Okay? I want everybody to take the next sleep setup, okay? The way exactly I outlined it. Outlined it. Good luck with it. You're welcome, my best brother. Alright, looks like there's no more question. Maybe we'll come back to my chief audience if I haven't spoken in 3 hours, man. Yes, yeah, you're welcome, Gavin, brother. Take care.